Hi, you're welcome to GMB Masterclass webinar session. My name is Olu, and I will be taking you on beneficiary ownership part one today. As usual, we love to give you a backdrop on what we would like to discuss because this actually broadens what we will be discussing in future. Okay, beneficiary ownership represents another step in the evolution of financial crime and sanctions. There is a growing consensus that the current global framework for fighting financial crime is not as effective as it could be, and that more needs to be done at the international, regional, and national levels to help identify and stem the flow of illicit finance. These activities, which support some of the worst problems confronting society today, including terrorism, sexual exploitation, modern slavery, wildlife poaching, and drug smuggling. And this is not to say that the progress has not been made in this area. The Financial Action Task Force, now in its 30th year, has led the way in internationally coordinated action to reduce cross-border financial criminality and continues to do so in new and dynamic areas. However, a combination of regulatory reform, cultural change, the introduction of new ways of working, and the deployment of new technology could significantly enhance the work of government, law enforcement, and the financial service industry in tackling the threat posed on a global basis. Yeah. Okay. Now let's talk about ultimate beneficiary ownership, UBO, UBO. Um, I like to explain UBO as um, assessing beneficial ownership isn't really like looking for a needle in a stack. For me, it's more like looking for a needle in a pile of other needles. Tracing beneficial ownership to owners, especially outside the UK or the United States of America, is often difficult in practice, not least due to different national disclosure regimes within the European Union itself or the United States. Now, what then is a UBO? Um, the FATF also stands for Financial Action Task Force, defines beneficiary owners as the natural person who ultimately owns or control a customer, and or the natural person who on whose behalf a transaction is being conducted. It also includes those persons who exercise ultimate effective control over a legal person or arrangement. So when I say a legal person in the context of this session, a legal person, or in the context of compliance generally, a legal person is basically an entity, yeah, not a natural person. So if I'm referring to an individual or human, I would use natural person. Referring to an entity, because of a legal terminology, I could use a legal person. Yeah. Okay, who then qualifies to be identified as UBO? Um, let's start with an example. Let's assume we have a company, and this company, let's assume this company is what, $100, and this company is owned by, you know, a number of individuals or three people, three individuals. Now, if this entity or this company is worth $100, it means that the aggregated sum of these three individuals cannot exceed 100. It could be less than 100, and maybe the rest of it is somewhere, but it cannot exceed 100 because the total worth is 100. So if you understand that, now let's start in the beginning. Let's start at the beginning. So a UBO, like I earlier defined in reference to FATF, is any natural person who owns 25% or more of a company. Yeah. If that's the case, if let's assume this first individual owns $60, which means $60 of $100 in percentage would be 60%. $20, this other guy is 20%, and the other guy 20% as well, and $20. And the UBO here would be the guy who has exceeded or met the threshold of 25%, which is the guy with $60, which means he's been identified as a UBO. So he is a UBO, and the rest of them not. So just to recap, the beneficiary owner is an individual who owns or who ultimately owns or controls 25% or more of a company's shares or voting rights, or who otherwise exercise control over the company or its management. Where such an interest is held through a trust, for example, the trustees or anyone who controls the trust will be registered as the beneficiary owners. Yep. Okay, let's move on to the next point. Why is it important to identify a UBO? First of all, this is to ensure compliance with the law. Financial institution or non-bank financial institution or regulated entity has to identify a UBO or UBO to ensure compliance with the law. Secondly, where such an interest or control is held by a criminal or sanctioned individual or even a politically exposed person, it increases the risk of bribery and corruption, sanctions, circumvention, terrorist financing, money laundering, tax evasion, insider dealings, modern slavery, or any other financial crime. Criminals have long used complex corporate structures to hide their real identities and conceal where the funds have come from or what they are being used for. In recent years, the fight against money laundering has stepped up with stricter regulations such as the fourth MLD, the fifth MLD, the money laundering regulation 2017, 19, and 20, put in place around financial transparency. Regulated firms have an obligation to carry out exhaustive checks when onboarding new customers to ascertain whether they present a compliance risk to AML, anti-money laundering, and ABC, anti-bribery and corruption. Not everyone wants to be identified as the beneficiary owner. Many criminals will deliberately use the opacity of corporate vehicles to hide their identity, the true purpose of their account, and the source or use of funds or property associated with the corporate vehicle. And it's very important that the inability to identify the ultimate beneficiary owner of a company could lead to an unintended breach of these rules, resulting in heavy fines, severe reputational damage. So it is crucial issue that firms have to have a grip on this. Ownership structure of companies have grown very complex through globalization, and they are not exactly transparent either. It requires serious and repeated research to identify a company's ownership structure, and there are dynamic changes to consider too. It's truly a great effort to ensure compliance in this area. Okay, point number 3. Let's see. Actually, still on point number 2. I think it's important that we talk about this as well, because you can't talk about beneficial ownership and the importance of beneficial ownership and not talking about one of the biggest leak in history, the Panama paper. Beneficial ownership have in recent past come under the limelight due to the release of the Panama paper by the International Consortium of Investigative Journalists, and that's the ICIJ. The Panama paper, approximately 11.5 million of leaked documents from a Panama-based corporate service provider, Mossack Fonseca, detailing how some of the wealthy and powerful individuals and politicians are using webs of offshore companies for illegal purposes, such as fraud, tax evasions, or to avoid local regulatory supervision or international sanctions. Um, yes. Okay. So let's talk about point number three now. How to identify beneficial owners? How do I identify beneficial, or how should entities and firms identify beneficial owners? Knowing who owns more than 25% of your customer is, in most cases, quite straightforward. By looking at the organization structure of a customer, one can have some idea of who the beneficiary owner are. Financial institutions and regulated entity can rely on official documents like the partnership contract document, prospectus, depending on title deed, trust deed, or annual financial statement to determine organization structure of their customers, because this gives a bit detail on who and how it's being structured. It's important. This is important because finding the natural person or persons who have ultimate control of your customer is more difficult than just knowing the organization structure of the customer. This will require you to have a certain, would require firms, organization to have certain level of knowledge on of how your customer, the customer operates. For instance, who makes the final decision in running the business, appointing of as key executive, or providing and managing the funds of the business. In some cases, knowing the relationship among the key executive will also give some indications of the ultimate decision makers, e.g., in the case where husband and wife are also shareholders of a company and each owns less than 25% shares of the company. Beside being majority owner, a person who controls the customer, a beneficiary owner, can also be a natural person on whose behalf the transaction is carried out by the customer. This definition takes into account the relationship between an intermediary and the customer. This could be a case where a foreign corporate service provider engages another foreign corporate service provider for its services. When an intermediary or chains of intermediaries are involved, then the firm will have to identify the natural person or person on whose behalf the intermediary is engaging the services of the corporate firm. Yeah. Best practice, how to identify beneficial owners. Best practice is that from our experience in GMB, is it begins with securing reliable access to robust, verifiable, and complete UBO data, so that compliance team can map out and visualize holistic ownership hierarchies. Once the UBO have been identified within the applicable jurisdictional threshold, they should then be screened by the ML team, or however the structure of the entity of your company is. Inclusion on global sanctions watch and enforcement list, identify politically exposed individuals, persons, any links to PEP as well, relative and close associate, any links to financial crime, including money laundering, bribery, corruption, or fraud. And where IT risk is detected, the regulations mandate enhanced due diligence should be carried out. So now let's look at the fourth point. Let's look at the challenges with identifying beneficiary ownership. Um, First of all, increasing regulations. The increasing regulations. I think it's important to say the effective and the coherent application of global standards is one of the primary means by which financial system can be safeguarded, and criminal can be thwarted um, thwarted, yeah, in their attempt to profit from their crimes. With increasing regulations, demand that financial institution and a regulated entity should know who really controls their customer. This places a different set of burden on the compliance team. Um, Multiple jurisdictions or entity types. Unfortunately, ownership won't necessarily be neat. within a single jurisdiction or entity type, and it could be many layers deep depending on the structure of the customer. In addition, different countries have different levels of transparency and disclosure requirements regarding company registration. As a result, we have seen um, many firms struggles with the discovery of UBOs due to the difficulties of mapping out the full picture of an organization ownership structure. Um, yeah. Another one is the knowledge of the front office, and which is the first line, and the compliance function. It's important that um, you know, the sheer number of sources needed to comprehensively understand an ownership structure, identify a UBN screen or an individual needs to be understood by the first line. The minimum requirement, what document is acceptable, what document validity of document, at what point what sort of information, what's the level of information we can accept, is there an escalation process, and what's the waiver process in your organization, or exemption process? Is it clear? Is the policy and the standard clear? Is the training framework effective to engage on gaps and knowledge of the operational team, the compliance, and the application of it, as well as your systems and your tools as well used to in the course of the operational assessment of your understanding your customer. Another one is data source. That's one area that organization and firms, financial institutions struggle with. Data sources range from publicly available source, e.g., many corporate registry, to premium provider of company data, regulatory data, and adverse media. So companies have to access multiple websites and subscribe to multiple vendors, as well as find a way to integrate this into existing KYC or onboarding platform. The challenge does not end once the initial identification and verification is complete. Firms need to have or to keep up the ongoing monitoring of their identified UBOs. And as the regulation are updated, the processes have to be refined in order to ensure ongoing compliance. Um, and as part of this is also having a very robust enterprise-wide risk assessment, having a very centralized process where it is easier to track changes, have their compliance regulations, a regulatory team, hot scan, integrated within the AML team as well, the KYC, and so on and so forth. So these are challenges that organization faces and individual faces in assessing or identifying ultimate beneficial owner. So that'll be the end of the part one. You can subscribe to our YouTube channel to watch beneficiary ownership part 2, part 3, and 4, and other interesting compliance topic. Also visit our website on www.grayandblack.co.uk. Our email is enquiries@grayandblack.co.uk. You can also reach us on info@grayandblack.co.uk. There's a lot of animated videos to watch. We also provide trainings face to face. We provide not just face to face online sessions as well. We design training platforms, training frameworks, as well as other financial crime compliance consultancy. Thank you.